Hello everyone, this is Imri with Parallax Capital Advisors, and I'm back from a whirlwind tour of Paris, the City of Lights. I just went on a quick holiday and I couldn't wait to get back so that I could film this video properly for our YouTube channel. I've been able to discuss this price chart with our Discord server members, so if you want to hear a little bit more about what that conversation is like, or even participate in it, where I talk about what I think is honestly one of the most important price charts out there right now that hardly anyone is talking about, then come on over. There is plenty of room in our Discord community for you. The reason I think this price chart is so important is because it is the core commodity index. It is an index which tracks a basket of commodity markets, including energy, agricultural products, base metals, and precious metals. So the reason this price chart is so interesting to me is because of the ending diagonal that I've spotted on this price chart. So if you're worried about price inflation, and who isn't at this moment, it's what's dominating financial headlines. Even people with absolutely zero interest in markets has heard about rampant inflation at this point. Now, here's the problem with inflation and how economists and mainstream financial media, as well as central banks, look at inflation. They look at inflation after it's already happened, after it's already starting to show up in economic reports. And by definition, economic reports are lagging. They tell us what happened last month. They don't tell us what's going to be happening in the future. So think of reacting to economic reports a little bit like trying to drive by only seeing what's in your rearview mirror. Now, I don't know about you, but if I tried to drive only by looking in my rearview mirror, I'm going to crash most likely into the things in front of me that I'm not looking at. And that is a lot of the fear that the market is pricing in to equities right now. And all risk assets, to be frank. They're worried that the Fed is not necessarily forward-looking, and they're kind of reacting to what's already happened. It's a very interesting turn of events, and it begs a broader, deeper discussion on the wave principle and how the wave principle so accurately and so in such powerful fashion charts changes in market psychology and speculator sentiment, investor sentiment. Anyway, I digress. So an ending diagonal, as its name implies, is a terminating pattern. Now, it is a type of motive wave, but it does share many characteristics with corrective waves. So one of those characteristics is the overlap between waves 4 and 1. Typically, in a standard impulsive structure, you wouldn't want to see that kind of overlap. However, it is almost a mandatory occurrence if you are tracking an ending diagonal. Some other rules governing ending diagonals is that wave 3 cannot be the shortest wave, but wave 3 is shorter than wave 1, and wave 5 is shorter than wave 3, and wave 4 is shorter than wave 2. So that is another characteristic that the market is losing steam and is getting ready for what is typically a powerful and violent reversal. So one of the guidelines that governs ending diagonals is that once they complete, in terms of when that fifth wave of the ending diagonal is over, prices tend to travel back to the origin of that ending diagonal, which in this case is where I have my wave 4 label here, which is the December 1st, 2021 low, which in the CRB comes in at 218.39. Right, I'm just going to place a horizontal level here so you can visually see it. So from peak to trough, if we get that move, that would be roughly a 34% decline in broad commodity prices. Okay, now I know some people are starting to get excited and say, hey, that means prices are going to come down. Well, yes, prices will come down, but they will take time to show up on the consumer side of things. The scary thing about this price chart is that you have to think, why will prices come down? And that's a bigger, deeper discussion that I would love to continue over in the Discord channel. But a big reason why prices might come down is a slowdown in global demand, and that again brings the whole discussion back to those recessionary risks that I was talking about a little bit earlier. Okay, from a technical analysis perspective, let's take a closer look at this ending diagonal. So obviously we can see that wave 3 is shorter than wave 1. Now let's see if wave 4 is shorter than wave 2. And it is. For wave 4 to be longer than wave 1, it would have to exceed 287.4 in the index. And finally, let's see if wave 5 is shorter than wave 3. Spoiler alert, it is. I've already measured the ending diagonal, of course. So as you can see, we got pretty close to what I would call an invalidation level at 332.46, but we didn't. And the sharp break below the trend lines of this ending diagonal, and a key point here is a break below the wave 4 extreme of this ending diagonal, gives me greater confidence that I indeed have this labeling correct. Finally, I'm just going to pull up some momentum indicators, and you can see for yourself the sharp bearish divergences that I see here between the price action itself and the various momentum studies that I like to look at. So bearish divergence is when prices make new highs, but a momentum indicator starts to trend lower. Okay, so divergence does not always mean we're going to see a move lower. All right, we have to be very intentional and conscientious about when we look for divergence and how we match that up in terms of where we're at within a larger Elliott wave cycle. And of course, we cover this in so much more detail over in our Discord. So how do you trade an ending diagonal? Well, there are two methods that I like to use. Number one would be a break of the trend line, the 2-4 trend line as I like to call it here. And then the method that I go with most frequently is a break below the wave 4 extreme. Both these methods avoid picking a top or bottom in the market, and in the case of a break of the wave 4 extreme, it demands that the market prove to you that it takes out a prior swing point before you commit to the market, right? So here's here's a very easy definition of a trend. What is a definition of a trend? In this case, a bullish trend. We need a series of higher highs and higher lows. So the moment that we break one of those higher lows, by definition, it's tough to say we're in an uptrend. And that's how that concept applies to how I love to trade ending diagonals myself. So again, we could be looking at a violent reversal here in commodity prices. What that means for the larger global economy, what that means for other markets, hop on over to our Discord. I'd love to continue that conversation. So while I don't trade the CRB itself, I do look at it very closely because I love to trade commodities. I love to trade commodity markets because of how volatile they can be. And just take a look at a crude oil chart to see, just look at this incredible rise that's taken place in the markets, especially since crude oil went negative. Crude oil, fantastic market to be trading. Copper, look at this violent decline, another fantastic market to be trading. How about coffee futures? Also, very sharp rise. Okay, and then right now we look to be trading broadly sideways. So anyway, the bottom line is don't be sleeping on commodities. They're an excellent market to be trading. And if you do want to trade commodities, make sure you pay attention to the CRB. Thanks, guys. See you in the next video.